Tuesday. Looking forward to Powell taking the mic right now, whether or not anything new will be added or what he could add. I have no idea. Looking forward to the market's reaction. Is Bitcoin forming a gigantic head and shoulders? NASDAQ had what looks like some serious resistance. Let's zoom out for a second. We have going back all the way from 1974 until today. We got some strong structure in the markets here on the NASDAQ. And you could see that we are right now into an area of resistance off of the November 2021 top. We're going to be looking at that particular top in just a moment. We're going to look at right now, a lot of people are talking about, and they're like, it's this right here. I tried to get Grok to go, hey, could you draw Bitcoin on the girl with the blue shirt and then write gold on the girl with the red? And it really wasn't able to do it. I guess maybe my prompt wasn't the best, but nevertheless, pretty easy task. And a lot of people are looking at 2025 and they're like, gold is roaring in the bliss. It's absolutely a delight. And it's not only gold, silver right here is on deck. Silver trading, what is it? $44 has $50 in sight. A lot of people, rightfully so, think that silver's gone too far too quick. Gold, I thought gold had gone really far, really quick. Look at that beauty right here. This is the massive resistance here at $50 on gold. Sorry, I said 44. Yeah, we're at $44.23 for silver. Silver looks like a gigantic cup and handle. Do you remember what happened when gold was trading over here? And we were at this area where gold was once again into the $2,000 resistance. A lot of people thought it was going to be rejected again, because in the past 5 years, every time gold had came into $2,000, it had been rejected. It had been rejected much now, like a lot of people feel that that's what's going to happen with silver. Silver into, $50. The last time it was there, it was rejected hard. Makes sense. It's going to be rejected here again. And we didn't feel that way. We said, no, this is actually, and relating it to the Fed cycle at the time, Fed is beginning to raise rates. Fed is going to engineer a slowdown. And as they do that, this is the time to look for gold. And up until things finally break, and shortly thereafter, look for gold to peak. And there's going to be much more inviting opportunities. Now, things have changed since then. There's been a radical change in the fundamentals of gold. So it's not only the Fed cycle here, it is also now obviously the buying of gold over treasuries from central banks. It's a massive fundamental shift. A lot of people think that, you know what? Trump and Bassett knew what was coming, which is why, do you remember when they were bringing all that gold home? There was a reason they were doing that, and they were getting ready. Are they on the right side? We're going to find out. Gold didn't stop. Gold did not stop at that $2,000 resistance, and has been on an incredible ascent. I thought it was pretty overbought over here, because it is overbought, and it has been overbought, and it's been overbought here for a record amount of time. The longest in measured by months that gold has been overbought, even going back to when gold was depegged from the dollar. And you had that massive, massive, massive moves on gold. So something different is taking place here. Does that mean that it's going to go up and to the right forever? Obviously not. Again, I thought this consolidation was going to offer a more inviting opportunity, and it did not. And the quick ascent on gold, it has been magnificent. Look, you have me. What's happening is different. I don't know what happens next. I think a lot of people for sure are ready for whether they're looking to sell or not, or just ready, prepared mentally if you get some type of pullback. Could we remain oversold for another month? For another 3 months? I don't know. It's crazy what's been happening. I don't expect why mean reversion makes sense at any particular point in time. I don't know how much of opportunity we will get. But point being is a lot of people are looking and measuring from 2025, January 2025 until today. And they're like, clearly, gold is, magnificent. I think it's a very poor point of reference for one particular reason. Gold had just made a 50% move up. Gold, Bitcoin did. I'm going to go over here and you can see coming into, from the election in November 2024. And here you have, Bitcoin making a 50% move up in about 45 days. In less than 60 days, it's able to make a 50% move up. So when you start measuring a point of reference of an asset after it just made a 50% move up, I'm not sure that's the best point of reference, my own personal belief. We're going to look at what I believe are other very important points of reference. And there's one particular one that does not point to, let's say, Bitcoin, the king of all kings, the king of all assets, being able to outperform from any point. We'll look at it all. But again, so from 2025, I hear Powell. One second. Let me get this guy out of here. There we go. So I don't think personally, when people look at January 2025, that it's probably the best point of reference in so much as that Bitcoin had just made in 45 days a 50% move up. So talking to someone else earlier this morning, they're like, listen, I bought gold in March of Bitcoin in March of 2024. And GDX has been outperforming. Same thing. Well, you bought it when in a 90-day period Bitcoin had made a 50% move up. So obviously after Bitcoin makes that move up, you're attracted to it, you're buying it, but you're buying an asset after a 50% move up in less than 90 days. It's probably not the best. It's your point of reference because it's where you bought it and began stacking. But as far as looking and measuring assets and their performance versus each other, it's probably not the best reference point to use in so much that, it's like measuring gold after gold does peak and just peak for as a pullback or a consolidation. But gold over here in what are we up in? I mean, I don't expect Bitcoin type things, but from that last breakout, you know, it's up 13%. It's a major move for gold, and it's happening in 3 weeks. You don't begin measuring from that particular point. But I think that, and I really genuinely believe that the election is a really good vantage point to taking a look at Bitcoin. Why? Because, well, it had incredible ramifications about which administration won the election as far as, overall policy, and including the previous administration was completely anti Bitcoin and crypto. And now you have an administration that favors it. And of course, it makes a lot of sense. And that's why you saw Bitcoin putting up a 50% move out of nowhere. And again, from the election till today, it paints a different story. I like not looking at the election per se. And I think that a really good reference point and one that we should all be familiar with is when the bull market began. That bull market, which began in, we'll call it December 2023, when we called the bull market breakout 17,250. And if you look at it from this perspective, I mean, is there any Bitcoiner who's like, oh, I should have invested in gold and or tech? We got the IXIC, the NASDAQ over here tracking tech. And yeah, that's amazing that gold is tracking tech. That is absolutely phenomenal. And gold is doing different things over here. It's entered a super cycle. And we're seeing something that we've talked about before. We're seeing a slow motion repricing of gold and Bitcoin in real time. Hard, scarce assets. Now, when you get it, January, we're into September, 9 months. That's a long time. That deserves my track. Yeah, for sure. Okay, well, I understand why people use the calendar year as a reference point, but be aware, Bitcoin had just come up or moved up in about less than 60 days, 50% from the point that you're looking to track from. This is a much more, let's say, it's an important point when the bull market began. And another important point, and I'll look at the one that's not favorable last, is is the COVID lows, the birth of QE, the beginning of the last Fed cycle, the beginning of it, right? And when's the next cycle? The next time they institute QE. And obviously measuring from this perspective, I mean, gold's still doing pretty good. It's tracking tech pretty well. There's no question about it. And of course, Bitcoin here, it's not even comparable what's taking place over here. Are we going to see that same thing between, obviously if you go back and you look at what was the point before that? It was 2018, the fourth quarter of 2018, when you had, Trump have to come in and he was like, buy. Markets were into 30% correction. There's a lot of fear in the market. And look at that, gold and tech, they're actually in unison with each other. That's pretty interesting because we've identified three particular assets classes, right? Bitcoin, tech, and gold as being ones that are going to likely continue to outperform the devaluation of the dollar. And here you go seeing visualized, except one of these is not like the others, obviously. And it's because of its market cap. Its market cap is absolutely tiny in comparison to gold. Gold has over a 10x market cap of Bitcoin at this particular point in time. Now, 5 years forward, was it interesting? Gold is being revalued. I don't think that any of us would be surprised if by the end of the decade or thereafter, gold was trading at a significantly higher price. When I say significantly, I'm talking 5 digits. And if that were happening, the market cap of gold is going to be absolutely astronomical. But don't forget, and we've looked at this. I can't see the one thing over here. There we go. I needed to see all. I didn't have the y'all comments over here, and maybe that was good, but I feel like when I'm seeing the comments going by as we're presenting over here, I feel like it's like, I don't know. I just like the vibes you all throw out there. The debasement. Thank you, Dog Nation. And so if you picture a world where in the next 5 to 7 years, gold is trading at 5 digits, you have to consider the major debasement that's taking place. I think this is a good slide over here. And you're looking at the dollar's worst year in decades. Now, again, this is not fair. This is looking at the dollar measured versus other fiat currencies. If you were looking at the dollar and in it, you had gold, you had Bitcoin, and you had at least the yuan, and the yuan has been devaluing. It's not like the yuan is appreciating yet versus the dollar. Will there come a time when the yuan appreciates versus the dollar? That's not happening right now, but it's not included in the index, which is really weird. It's like, it's just really weird. It should be probably gold making up 25% of world reserves. It probably should have a 25% weighting in the DXY. That would make sense. It doesn't have any. That doesn't make sense. Anyway, point being, the dollar and its devaluation is taking place. And if you consider that continues and through the end of the decade, as this monetary reset is happening, y'all remember when we were talking about monetary reset is happening, I think now in 2025, it's pretty crystal clear monetary reset is happening. It's happening, and a lot of people have different views of how it's expected to carry out. And does the US plan on having that tied to Bitcoin in one way or the other if they get their way? Perhaps, and maybe. Does China and Russia clearly believe that gold is something that's going to be able to protect them in this new world? Absolutely they do. And it's very clear as China's relentless bid at gold continues. So let me jump over and then point out one area that is not favorable at all for Bitcoin. And I'm coming back to where you saw the last bull market peak over here after the global lockdowns, and that was in November 2021. And from November 2021 until today, it's been a horse race between gold and Bitcoin from that one vantage point. Now, is gold outperforming from that vantage point? Yes. Was gold outperforming 30 days ago? No. Is that going to continue to be variable? Likely. Likely. Um, is this say that maybe actually between now and the end of the decade, it might be good for, I feel like a lot of Bitcoiners easily accept the bullish case for gold. I'm not so sure about how many gold bugs do. When I say gold bugs, I guess what I'm trying to say is people that were born before Gen X. I think for whatever reason, Gen X has a really good idea of that transformation from the analog to the digital world. They lived through it, and they're able to kind of like understand why they both have a time and a place, and I do believe that. My own personal belief, and you know, as a Bitcoiner, you can understand the whole lesson of not your keys, not your corn, right? It's very real. And then in today's world, some people very well might, you know what? It's easier to store my Bitcoin, you know, in something like with the enemy, with BlackRock. You know, do I trust BlackRock? No. Do I prefer having my, let's say, um, my play on the devaluation of the dollar through Bitcoin, perhaps on a trusted exchange where I don't have to worry about losing? Yeah, I could see a lot of people feeling a lot more comfortable with that, especially after things like the blow up of FTX. Is it complicated storing your own keys? Yeah. Are there risks? Yeah. Is it a lot easier? Are there risks having your Bitcoin exposure in a BlackRock ETF or Fidelity or any other ETF? Yep. Could they one day provide an attack against Bitcoin? Yeah. Um, but anyway, with gold, you're always told that like always own physical gold. Well, good. I mean, you have to store that, and it's very dangerous, just like it would be storing Bitcoin in your keys at your own house. To do that with gold, you know, it's very dangerous. At least with Bitcoin, you could have multi-sig in different geographic locations. I guess you could split up your gold, maybe bury it in a national forest somewhere, but or store it in a vault. And if you're storing it in a vault, it's not your gold, not your gold. It's the same exact concept. So what this all was a roundabout way of saying is that I've always been a fan or advocate of getting exposure to gold through the futures market. And I get it. It's paper. You don't like unless you're accepting delivery, you're not, which you can't. You're not getting, you don't have any, like, it's not physical gold, it's just paper digits anyway. And this is not to say that like I don't believe in the physical stuff or anything like that, but it's a lot easier, and it's a lot harder to actually have to sell and deal with the premium, the physical stuff. It's a lot easier to gain exposure in and out in the paper market, in the futures market, and the leverage. This is what Elliot was trying to get at. The leverage. I saw a pirate in the corner of my eye. I like that. You know, if measuring from the high, and again, is this a fair vantage point? You're measuring it from when Bitcoin peaked. You know, you're measuring it from the highest price point that it had. Well, okay, we'll take the handicap. You know, it's like you're playing golf with Tiger Woods, and you for sure you guys got to play with an appropriate handicap. We'll take the handicap. We'll go from the worst possible potential point of reference possible. But if you were gaining exposure to the one futures contract of gold, that affords you the possibility to be controlling 100 ounces of gold, and the ride is smoother. Up to date has been smoother. And again, this is what I believe is a secular, no, I don't secular, a super cycle in gold. That's what we called it on the breakout in March 2023. I don't, we'll see at 5,000. We'll just reevaluate what's going on and talk about it. You could bury it. I think not, maybe national forests are the best place for that. Those that live in the U.S. Does excuse my ignorance. Does Europe have the equivalent of like U.S. national forests? Is there land in Europe that is government owned land? Um, anyway, thus begins. So, first of all, a lot of victory laps taking place, rightfully so. Those that have been like all in on gold, and if you judge from 2025 till today, get on you. If that's when you began stacking Bitcoin over gold, it's working out. Any other vantage point, it doesn't work out like that. It doesn't make any sense. And if you're into, or we're about to hit a bear market, as a lot of people do believe, we are in the window of what will be a bear market for Bitcoin, 4-year cycle enthusiasts, and look at the mega outperformance that could be expected if Bitcoin comes off here for 40 to 60% drawdown. There's no question about it. Timing is everything. Our timing right now has us, right now, Bitcoin and crypto completely on the sidelines. That includes Bitcoin bull runs is right now out on the sideline. And then all of our 8-hour templates, we're all out on the momentum is not there right now. And that's safe. And that is great. It could return at any point in time. By the way, stop loss on NVIDIA this morning, exit trade on IBIT this morning. And we're just holding 3 of our 6 now in stocks, a 50% allocation. FNGU currently holding 7%, Tesla 17%, and TQQQ 11%. Have you seen, this is absolutely wild, the seasonalities here is absolutely crazy, and so is this is the best performing track off of a 20% drawdown. It is, and you all know, very clearly correlated to what happened in 1996, 1997, back-to-back 20% plus years in S&P 500, then that 20% correction. This is a good chart showing that, like, that a lot of people panicking right now about stocks and gold pushing. That's a great one over there too, and I meant to do it, except the outperformance of gold is more closely aligned to Bitcoin than when looking at tech. We have the Nasdaq over there, and obviously, if you looked from 2023, again, the Nasdaq has been going ballistic. Bitcoin's performance doesn't really compare, but a lot of people are caught up in what's happening. I like this one over here. Check this out. This is being offered. Hey, listen, if 2026 continues to see the expansion of this, let's call it Bitcoin cycle, and it is a Bitcoin cycle, and for sure you all know how much I talk about the changing nature of the structure of this Bitcoin cycle. And it's for sure seen in, measuring not only the downside volatility, but the overall volatility. And we know the participants are different now. Retail is irrelevant. And this is not a retail driven boom and bust cycle. And there's a new, in the last week, how much Bitcoin was bought by these public companies between Meta, between Strategy, right? 1.5 billion. Is that right? And people are like, well, the price is down. Yeah, but you are seeing Bitcoin being distributed from people who want to sell into people who are looking to hold that for a long time. And if Bitcoin comes off 30, 50, 60%, they're not selling. That's not what their investment thesis is. Will spot ETFs see a lot of outflows if Bitcoin corrects that much? A lot. It's very correlated to the price action. But point being, So I guess what I was trying to get at, one thing was the changing nature of the Bitcoin cycle, and then my relation to the S curve. And then it also is highly correlated to risk, right? And I guess to start that off, let me get rid of gold for 1 second. And we're going to look just at Bitcoin versus the NASDAQ. And if you look at from January 2025, right? Hold on. Maybe I could find it. Flow's been good today. Appreciate. I mean, really, I don't. I'm not sure what the problem is. I know Nasdaq's at all-time highs, and I know that Bitcoin is off all-time highs. But is there a divergence that's taking place? Since November, the election, it's not close. Since 2024, are people getting caught up in some noise or short-term um just preference? I'm not really sure. Someone said, is that a giant head and shoulders forming on Bitcoin? That could very well be, right? Very early on in the session, someone was pointing out that they believe that potentially you're looking at, and I could see a neckline right here, or trend line, right? Very, very clear. Let's look at it from this vantage point. Is that, so a lot of people remember what this was like. I'm going to get off the weekly, or I won't get off the weekly. Here's the Wyckoff of 2021. You had that first impulse up, and then 1, 2, the spring, and the neckline. Boom. So are you seeing that here? Here was that the move up, the neckline, not the neckline, the spring up, and a break here. Is that it very well could be. The only thing is that if that were happening, and you could see this was it a 50% drop from high to low caused by Elon? Yeah, 50%, and just hold on 1 second, I'm having a little fun. Going from that first impulse up, well, it looks a lot different. This is the first impulse up that we're saying. Anyway, point being, if it plays out like that, I mean, 90,000, you know, is that a head and shoulders that could lead to a measured move that would be anything or should be anything severe? It doesn't look like it to me. Let me just give you what a measured move would be, just so we have an idea together. And so I think the lowest point would be from here to here, 20% drop off of there. I said 90. That's a pretty good eyeball, right? Taking us right to 90,000. And, is that a bear market in Bitcoin? No, 30% corrections are expected. We've seen many of them. And I don't think that's anything different if that were to happen. I think that would be a lot more of the same. But more importantly is that there are warning signs. We spoke about them yesterday. And some of those warning signs were, well, Bitcoin bull market is no longer in the market, as are any of our swing trading templates. And I did say that maybe if we start seeing some of our 8-hour templates going ahead and begin attacking the sell side, that actually might indicate that we are oversold, and that might be where we bottom out. Now we're still trading above the last swing low, right? And above the resistance formed from December and January. And technically, there are warning signs and momentum is waning, but we're not, we haven't made any breakdowns yet. Our first early warning sign was momentum shifting. We're safe and we're out. That's it. You know, and would it be a surprise here to see Bitcoin actually not break down and continue its run up? Absolutely. Seems a lot of right with me. And be prepared. We just looked at what are some not only warning signs, what a technical breakdown entails, and expectations if we get that technical breakdown, what could be very close in play. Newton. I want to get back to Newton over here. And, 2026, let's say we talked about Bitcoin in relation to its S curve. Bitcoin is also has a high correlation to risk, and risk seen through tech. And there's no, does it outperform? Yep. In a bear, does it underperform? Yep. Both of those things, high beta. Now, could you imagine in 2026, this bull market continues in equity markets? And if it does, by correlation, you see Bitcoin's cycle continue into 2026. And let's say, and relate this to Bitcoin. So a lot of people, hey, listen, I've been in Bitcoin. I played this whole cycle since 2023. I was able to go ahead and buy it. I was able to go ahead and dollar cost average in throughout the bear. Bitcoin is off its low by 5x. I'm completely happy. And 4-year cycle suggests it's time to get out. And then all of a sudden, Bitcoin's trading 150, 170. Whoa, 210. Wait a second. Something's different. 4-year cycles that didn't add up. I'm missing the ball. It's time. I seen everyone. It's time to get in. Everyone's getting, and then it keeps going. And then people getting in, and then boom, smashed out. I could see this happening in crypto. We've talked about what I believe is the greatest risk to a lot of people, as you could relate it to people misallocating into alts instead of Bitcoin over these last 2.5 years. And this is why retail is not present and why retail is no longer relevant. This is a little bit interesting. In case you wondered why stocks are back near all-time highs, and then you take a look at their actual earning estimates, and they continue to improve. Remember, we've said watch out when they continue to go the other way. Are tariffs eventually going to cause to the margins that these companies have to be eaten at? Do you think that Mag 7 has any type of exposure tariff related? A lot of funny businesses going on. By the way, bull markets last longer than you think. This current bull market, 36 months in a couple of weeks, with the average lasting 67 months. A lot of people think we've come too far too quick, and it looks like it. We're at that important area that we were just looking at of resistance, and you could see it from this view over here. Now, we look at Bitcoin. We look at Bitcoin, and when it gets into that euphoric phase, and how it kind of when it gets into that area. Right now we're in the sustainable channel. We expect a lot more of the same, unless we break down out of it or break up out of it. If we break up out of it, we expect accelerated price behavior. Is that the same here with the NASDAQ? I don't know. We've only broken out of it one time to the upside over here, back in the .com, leading up to the .com bubble. And you can see that extended price action. Could that happen again if we get above this resistance? It's a major level of resistance, and it doesn't end there. And if you were just go like this, you could see that like this is a major area as well, not too far above, right? What's interesting is this accumulation channel. And that is one thing to watch out for. If we ever get into, not just that one, it's one that I'm seeing right now. If we get into that accumulation cylinder, watch out. That usually leads to some type of elevated and extended price behavior to the upside. However, oh my gosh. You either get a job or excuse me. I've seen this girl out on Twitter, Lindsay. She wanted to get to 1 Bitcoin, and she works. Her husband works, and she's been riding Uber part time. When she's not working, in order to do whatever it takes to stat. You got to have that grind attitude. You got to have that grind attitude for sure. I got off topic of what I was talking about as I moved over to the NASDAQ. I'm not sure where valuations. And yeah, there's no, I wonder two things. Hear me out. 15 to 20% of the Mag 7's earnings are affected by the bottom 70% of the population. We see that how the top 10 and top 20 are thriving in this current environment, and we see that major like separation here between a very small minority of the population and the rest, and how the bottom are going through even what could be called a depression right now. It's very clear. I think it's going to continue to become more apparent, and the question is does that affect the earnings of the, like, right now Mag 7 making up over 40% of the earnings of the S&P 500, of the Nasdaq? Is the economy, the markets, Venezuela? What's more important here? And they are earning. If the earnings change, that's obviously something different. I think it's really weird, if you all seen in the last couple of days, this whole circle of scamming that's taking place between Nvidia basically investing, for example, in OpenAI, into Oracle, and like, that, looking back, was that going to be signs of some Fugazi behavior that led to this meltdown? Probably. Does that mean it's coming anytime soon? No, it does not mean that. Just because people are very smart and aware and able to recognize things, that like the music is then coming to a halt today. It could, but it doesn't look like it. And where else were we? We talked about Zuck, and Zuck's like, listen, I'm just spending here. And we all know Zuri, one of the founders of Alphabet, has basically come back in because of what's taking place with AI, and getting himself as like the most involved, because he thinks that the same thing. There's no way they could miss this, and they need to be on the right side of this pivotal moment in technology. There's like, the spending's not decreasing yet. It's not even close to it. So, there's that saying, when the tide goes out, but right now the tide is coming in. So just some things. Um Economic data, not jobs market, but we looked at that quickly. I think that this needs a lot of attention. I think you could see it better over here. This is accumulating $1 million. Accumulating $1 million by investing $10,000 annually with a 7% annual return rate, right? And if I could add this up quickly, it would be 15, 18, 24, 25, and then 30 years. I want to make a chart doing the same with CTM, and I know 70% we call getting it done. Let's do it with something like a 40%, just, go, or 35%, try to underestimate. And with V4 here, we'll have to bring that up even higher. We'll do that with 70% on V4, of course, Bitcoin and crypto. And let's get a template, that people could use as a goal in order to follow. That's something that I really want to get into. Yeah, I'm not an ostrich. This is something Luke brought up a lot earlier. This is something in our blood indicator. And right now we are seeing acceleration of 3-month yields going down, bid. And in the past, this has led to recession, specifically in the last 20 years, every time. So we continue to watch. This is I said Sergey, Larry Page, and Zuck spending like crazy. I said 40%. That's what I thought it was. This is 35% of the earnings. I want to make sure that we could be as exact as possible. And the devaluation. I think a lot of people, and again, I'm just reminded of Venezuela and why the economy went like this. The stock market of the underlining, like the stocks are priced in the fiat. I think it's important to consider. Anyway, light and sweet today. Not sure what Powell said, if anything. Let's go ahead and just see what the comments are. Page, but muddle along is probably, I talk about my view of acceleration. Acceleration probably is going to be seen 5 months from now. Until then, it's probably a lot more of muddling along, right? And beige book showing modest growth. That's a good thing. Economy growing, not fast. Monetary policy has been very tight, and there's that lag on that monetary policy, right? And so right now they're just beginning to ease it up. Let's see what happens into the end of the year if they ease it any further. For now, we're gonna call it light and sweet, fam. Have a beautiful day. See you all back now on the inside. God bless you, everyone. See you soon.